longer term, it's a beast. So when I say short, I mean relative, not outright. But if you load it up at 40, yeah, it's up 50%, take profits. I loaded up at 40 and bought, but I sold it at just under 50.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are back with our resident coal expert, Matt Warder of Seawolf Research. Matt, thank you for coming back on the show.
Thanks for having me, man. Let's talk some coal. We'll get
Let's
into it.
talk some coal.
I love it. I love it.
Yes, if you're new to the coal sector, I would highly recommend you go back and listen to an episode that Matt and I did about a year ago. We'll put a little link up here for you to watch it. It goes over the basics of coal. We go into met coal, thermal coal,
Mhm.
just kind of how to get started in the coal sector. I would recommend if this is your first time watching one of our interviews, you watch that one first, then come back to this, and this will kind of give you an update on coal. So let's start out like we always do, Matt. What is your macro view of the coal market today?
All right. Well, we're in summer, so summer demand season is usually positive in terms of commodity price for both meta and thermal. We've seen over the last week, basically, coking coal futures finally catch up and move meaningfully over $200. When we look at the curve next year. What has changed on the fundamental side? Absolutely nothing. So, I think what we're seeing, like the trade magazines are still saying, and I'll pull it up. Like Argus's assessment today was for $178.70 a ton, which is congruent with the July number, but the August futures are already up to 196. I think a lot of that is partially the roll from July to August, and then also some short covering. I think people were short, the met coal prices for a good long while, and now that we have even just this little bit of buying pressure, it's forced people to cover their positions. I think that's the same. I think the same is true largely for the equities as well. And if we look at kind of the macro landscape, it's like the stocks that have been doing really well have been small cap, high short interest, uh, you know, uh, in coal, although I wish it weren't as highly short as it was, fits both of those factor characteristics. So as long as small caps and high short interest stocks are going to do well, the coal stocks are going to do well. From a fundamentals perspective, though, we're kind of still in the same boat. We're waiting on China to cut steel capacity. We're waiting on LNG exports from the U.S. to really kick in, so we can get an uptick in domestic pricing. And on the thermal side, I'll pull those assessments up here as well. Um, I mean, they've gotten better. When last we spoke, we were down in the low 100s, maybe even into the 90s. I can't remember what the last time we were on the podcast, but now we're up. Newcastle's up around 110. ARA is around $100, which is up from 90. I want to say the low point was like 93. Richards Bay prices aren't doing so great. They're still down in the 90s. So like, companies like Tungela really aren't making a whole lot of money at these prices. But um, the big boy in the US, Consol, Core Natural Resources now is probably going to be poised to have a pretty good back half of the year, and they're buying back stock. And so like that's the one that I'm, most heavily invested in at the moment. But that's kind of the backdrop. Um, I think the outlook for the broader economy, like I think, spending and this rally that we've had, the melt up will probably slow down at some point as we move in toward the back half of the year. Usually that comes in kind of post vacation season. You see a slowdown in spending, like after you get the kind of back to school push for retail. And that's also when the coal markets start to slow down too, coincidentally. So I think we have, probably a good month or so ahead of us. I'm not sure how much more upward momentum the coal stocks are going to have. That's going to be up to, macro factors. But at least from a pricing perspective, I would say that when there are buyers in the market, the prices that we see are what the real prices are. And when buyers aren't in the market, it's kind of a fugazi. I mean, it's a small spot market. There's not a lot of trades going on. So like, the for met coal, like I think the price is probably around 195, $200, for being honest.
Oh,
Uh,
I thought it said 178, but you think that's
178
kind
is
of the
is
real?
the future, but the further out the curve things have ticked up.
Okay.
And I think we're going to see, real prices kind of settle into the 190s here when we get into restocking season.
Okay.
So that's kind of where I think prices should be right at the moment. Whether that comes to fruition, I guess we'll see. But that's kind of the big picture here at the moment. And I guess let's start digging down and seeing what kind of more micro level questions you have.
Okay. All right. So just to kind of recap, typically in the summer we have a little bit of a peak in both
Yep.
met and thermal.
hmm
Now you mentioned LNG exports.
hmm
Once they start to tick up in the U.S., that's going to help coal prices. How does that
Yeah, well,
factor?
it'll help domestic natural gas prices.
Okay. Okay. And
So, and the PJM power auction that they just had was wound up being way higher than people thought. I mean, the data center demand growth, I mean, out here in the DC area, it's insane how fast they're building it out. And across the country, that's still the case. If we continue at this pace, we're going to find out that we don't have enough baseload power generation to really meet that demand. So I think power prices are going to remain relatively high. I think that's good for utilities. I think it's good for companies like Hallador Energy that we talked about a little bit before, that have made the transition from producer into or sorry, coal producer into power producer. Um, and Yeah, we'll sort of see what happens. I don't think prices are going to run away with us this summer, but I do think over the course of the next year we may get a stress test to the grid, and we'll see how well it performs.
okay, so you're if LNG prices go up, that
hmm
is more expensive for natural gas power plants, so they
Well,
might lean back
if
on.
if more domestic supply just goes offshore,
Ah, okay, okay. Then
and
it'll cause a demand for
right,
thermal coal for more power plants. Is that?
right, and oil prices spiked post Iran. They've relaxed a little bit, so if oil prices get back down in the 60s, that will reduce associated gas production in the Permian Basin, which will also tighten gas supply. So like all of those factors kind of work together. And Domestic thermal coal prices should be pretty robust when companies go to make their annual contracts here in the fall.
Okay, that makes sense. And what did you mean when you said that China is? I think you said they're still exporting a lot of steel.
Yeah.
So how does that factor into the met coal market?
Well, so there has been a narrative that has emerged from the Chinese Communist Party itself that they are looking to cut overcapacity, not just in steel production, but also in coal. Now, I wrote an article the other day that had a table from SX Coal, which is the Chinese steel, coal and steel, news publication. Their table, the only region that was really overproducing was Xinjiang, which doesn't really produce high quality coal. So I'm not sure, and I don't have access to mine level production. I'm not sure anybody does really. At China. So there may be an instance in Shaanxi, which produces most of the quality coal. There may be instances where certain mines are overproducing, and maybe that gets cracked down on. Maybe we see a little pullback there. But either way, coal on the Dalian Commodity Exchange has just gone vertical. And again, whether that's short covering or whether that's, I mean, the Chinese markets are kind of like casinos, they're very speculative, but it's just shot up. And HRC prices uh, have moved up along with it, but the steel makers really still aren't making any money, and we're still exporting in a clip that prevents countries like India from activating their own new capacity and those sorts of things. So the Chinese have intimated that they're going to cut, let's say, 50 million tons of production at some point. Now, if that all comes out of the export market, then that would be great. I mean, that would put China steel exports right back in line with historical levels, and I think then we would really see a turnaround in the steel markets, a turnaround in the met coal markets, and a march back up into the mid 200s to the high 200s. We haven't seen it yet, however. It's so far just talk. We'll see how it goes, and we'll wait from there. But that would be like the kind of like catalyst for a real turn in the market.
Okay, okay, that makes sense. If okay, we got a lot of listener questions here. There's
Okay,
absolutely no way we can get to all of them, but thank you
sure.
everyone for putting in the questions. It makes Matt and I our job really easy because rather than us guessing what you want to hear, we just read your questions. Okay,
Uh-huh.
so a lot of questions here on AMR, user Johnny,
Mhm.
DebtVeg. What maybe macro updates for AMR?
Sure. Well, really, I mean, not much has changed. We've gotten in a little bit of an improvement in the coal price. I haven't finished compiling their quarterly production for June. So I don't quite know yet. I think they're probably going to, at least from the couple of mines that I do see that have been reported in the MSHA, it looked like a pretty good production quarter. From a price perspective, Q2 wasn't great for the U.S., but depending on how hard they got hit with any kind of shipping offsets into India, India is one of their big export partners. I think Q2 will probably mark, the worst is behind us. Let's just put it that way. And I think there are bluer skies ahead. Now, it's the stock has moved up like 40% since over the past month. Is that necessarily warranted? Again, I don't necessarily know. Um, but again, it's a small cap, high short interest stock, so from a factor perspective, that's a good thing to be right now. I would say that like I use volatility based envelopes, which are kind of similar to Keltner channels or Bollinger Bands. And I also use options implied volatility to kind of project, two standard deviation moves.
Okay.
AMR's price right now, at least on the monthlies, is pretty close to a two standard deviation move up to the top. Usually that will mean revert. In this case, if it mean reverts, we're probably headed back to like 120.
Okay.
You can probably see, there was a lot of activity around that price level.
There's a lot, yeah, there's a lot of price action right around there. I'll just put a horizontal line here, somewhere
Yeah,
right
so
in
I
that
think I
ballpark.
think
Yeah.
I think how I would characterize the met coal stocks right now is they've outperformed here in the month of July. Um, Probably, again, a lot of that short covering, a lot of that is small cap factor movement. And some of it is probably speculative, bets that coal prices are going to rise here over restocking season. Um, all three of those things are fine. It's Had I been a little bit more macro aware heading into July, I probably would have been very, very long on both of them as well. I chose to play core because at least from a risk perspective, it seems safer. They're buying back stock. The thermal side seemed more stable than the met
Yeah.
side. And if Met did take off, then the Arch piece of Core, Core is the combination of Consol and Arch
Yeah.
legacy operations. The
What
the
what
Met
what's their ticker?
Arch CNR.
CNR. I know I've got them up, don't I?
Yeah, I mean it's had a nice run too.
Uh,
It went from
CRN or CNR?
CNR.
CNR. Oh, I guess I don't have them. All right. CNR.
Yeah,
Core Natural
yeah.
Resources. There we go.
Yeah, I mean, when they went down below 65, I kind of sounded the alarm bells that we needed to load up down there.
Okay. That was
And
the
it's
Vince McMahon laser
yeah,
eyes.
that was a laser eyes point for that one.
Right on.
Yeah, it is and the thing I liked about it is that the Met portion of Arch is sort of like a call option if Met prices do happen to accelerate. If China really does cut steel, like this one was at least for the last month or so comparatively safer, lower risk than some of the other ones. But because it's less high beta, it didn't outperform the HCCs and the AMRs over that period.
Okay. Okay.
But I felt pretty good about it. When we got up to 80,
Hmm.
or close to 80. I put on hedges with HCC and BTU, and my hedges got their faces absolutely ripped off. So, but it is what it is, man. I mean, I was sitting there going, I need to protect my profits, and instead I missed capturing the extra $3 of that move and just being able to trim it. So, moral of the story is, if you get macro wrong, you're in trouble.
Well, you alluded to the second one that we got a whole bunch of questions on. HCC, so Warrior Met Coal. What are
Yeah, look at that
your
gap.
macro thoughts on Warrior?
Look at that gap that's probably going to fill at some point.
Yeah, yeah, right here.
Yeah, I mean, I don't think anybody in Q2 is going to have fantastic realizations. I think Warrior is one of them. They're developing Blue Creek, so they're having to sell that into Asia. Asia is the incremental buyer, and Asia is just, paying absolutely no heed to, US East Coast high vol prices. So you kind of, if you're selling into Asia, from a price perspective right now, you get what you get and you don't get upset. And Warrior's trying to capture market share, so they're accepting that lower price. I have concerns about that strategy longer term. But no, I don't think their Q2 realizations are going to warrant the $60 price. I think this is probably, a relative short, from a perspective. Longer term, it's a beast. So, when I say short, I mean relative,
Yeah,
not
yeah.
not outright.
Okay.
But if you load it up at 40, yeah, it's up 50%. Take profits.
Yeah, yeah. Okay. I can technically here, this is just standing out at me, this bull flag right here.
Yeah,
Looks like that
I
measured it. Might have a little island reversal coming right here too with that gap.
yeah, 100%. Like I loaded up at 40 and bought, but I sold it at just under 50.
Nice, nice.
Uh, so I was like, 20. I mean, it went up like 10% in a day.
Yeah.
So like, when you make a big bet and it goes in your favor, and I ditched all the calls and I kept the equities. When we started to pull back from 50 down to 48, that's when I got out and I didn't get back in. So
Yeah,
I missed this jump that we had here in July. Um, just because, and the same thing with AMR. AMR went down below 100. That's kind of a no-brainer level for me, I think.
yeah,
But again, it went up like 10% in a day.
yeah,
And for me, just being short-sighted and realizing that we're still in kind of the early part of the summer, I took profits there and missed out on the big run up. So if you guys caught that, congrats. I think we're probably headed. I think we're probably going to mean revert. But from a technical perspective, look what we're seeing. We're seeing a new higher high, and we're
yeah,
probably going to see a new higher low.
yeah,
That,
yeah,
my friend, is a trend.
yeah, yeah. Yeah, when you look at this, the general trend right here, like you said, if you just keep getting higher lows, then
Yeah,
it's a grind up. Yeah, I
yeah,
could see
and
straight looking backwards too, Matt.
that's right. Now the one thing I'm worried about on the met coal side is what does the off season look like once we get past restocking season? We saw in this past off season that I mean the traders and the steel manufacturers just pushed bids down into really low levels, but really not a lot of coal got transacted at those levels. So is that 160 or wherever we bottomed out, on met coal real or not? I don't know. I think the price, if you're asking for, if you have to go out into the market right now and get a ton of coal, I don't think you pay 178 for it. I think you probably have to pay 185, 190, 195.
Okay, so closer to up there. Okay,
I think so. I mean,
okay,
that's my opinion. I'm not out there selling it. The guys who are might have different opinions,
yeah,
but I think it's more indicative that when there are buyers in the market, the price jumps up to expectations that I would get after I run, my supply demand models.
okay, okay. All right, and a bunch of people asked the question: if you had to choose between a Met, uh,
Oh,
would it be Warrior or AMR?
that's a good question. I mean, so in the short term, HCC is going to grow production like
Hmm.
pretty soon when Blue Creek comes online.
Yeah.
And the question will be first of all, what kind of price can they get? I think I'm starting to get a little bit worried about that. Um, will that erode U.S. high vol, the overall U.S. high vol market? If it does, then I do think high vol prices and low vol prices are going to start to diverge from one another. Then, you know, Warrior runs the risk of having a good mine, not a great mine, at Blue Creek, and that's kind of a worry for me. But uh, you got to go with the company that's going to increase production as the cycle begins to run up. I think that's probably a no-brainer. So HCC, if I had to pick one. Now, flip side of that is when you get to a certain price level, like if we have a supply issue, another outage at a time when supply is tight, steel prices can support it. And we can go back to $300, $400. When you get up into that level, AMR is going to way outperform HCC. And also keep
Okay.
in mind,
If we have another one of these, then AMR
yeah,
is going to kill it. Okay.
yeah, and also keep in mind that when, if that does happen and AMR can put that cash on the balance sheet, they're still committed to buying back stock. And HCC has yet to say what they're going to do with the money that they'll make from Blue Creek. So um, yeah, I'm always going to go with the guys who are going to return value to shareholders. But for AMR, we need to wait until the point where the cycle has really started to move, and then they're going to move the fastest.
Okay. Okay. Let's see. Let's move on to next question. Um, Rick wants to know, should we expect dividends or buybacks from NRP once they ramp up capital returns?
Yeah, well, they got to pay off debt first, and then yeah, I think they'll return that to shareholders. I think that's what the board wants. I think that's what the executives want, and certainly what the shareholders want. So yeah, let me pull up so I can take a look at it. Yeah, I mean, we got down to around what, $90 on it about a month ago, which was a pretty easy buy.
Yeah.
Now, because it's a master limited partnership, I can't own it in the size of my 401k, so I just have it in my personal account. And I just buy a little bit whenever I get paid. So like I'm kind of price agnostic to NRP.
We call that DCA, dollar cost averaging.
Yeah,
Yeah.
it's like, every time I get paid, I put a little in my personal account, and I'll buy, a few shares, or whatever. And I've done that pretty consistently for about a year and change now.
Their dividends are pretty good, aren't they? Okay, 3%.
It's
Yeah.
it's like it's like 2.97, and then they usually do a special.
Okay. Okay. Oh, that's what it was. It was the special dividends that I was thinking of. Okay.
Mhm.
And let's see. Okay, we got NRC. Let's talk a little BTU. So, got a bunch of questions on BTU asking, is the bottom in? He drew in a little head and shoulders pattern. I'm surprised I didn't notice that. But what maybe macro thoughts on BTU?
All right, so the outcome for the stock is, and I'm going to pull it up here myself. Um,
If you want to share your screen, that's fine. We can review it.
yes, I can, sure, if you'd like me to.
Yeah, sure.
I'll share up here. So these are the monthly options, I believe.
Okay.
So these lines tell you where two standard deviation moves are from an implied vol perspective. From
Oh,
an equity vol perspective, these are the volatility based envelopes. You can see how we're just scooting right up along the top here.
yeah.
So like, my buy and sell signals are when we move down below them, and then when we get above them, I set trailing stops and sell. So like I'm not in this current move.
Yeah.
Just say that. Again, I think this is a factor move, and really the value of it's going to depend on whether or not this deal with Anglo goes through or not. They more and more. I've heard conflicting things. I saw on a Facebook group there was a note from the inspectorate that I wrote an article about a while ago that talked about how they recommended sealing in the longwall at Moranbah. And then now, anecdotally, I've heard from other people that the continuous miners are already turning, and that Grosvenor may actually be in play too. So, if
Maybe
those
take a
two,
step back. They've got a fire, and they're
yeah,
trying to stop it, right? So maybe just take a second and go over the deal
exactly.
and what
So,
happened with it.
so at Moranbah, there was what have coal companies been calling them? An ignition, not an ignition, I don't know. They've been calling it some kind of event, right? An ignition related event or the fire. Yeah. There was a fire.
Yeah,
Uh,
there's a mine fire.
there's my fire. For them, it happened in the gob or the goaf as they call it in Australia, which is like, if you imagine a long wall kind of like shearing along or whatever, and the shields are behind it. So as the shields move forward, the area behind the shields collapses, right? That's what they're talking about when they're talking about the gob. So that's where it was. They had to, there was elevated levels of CO2. They got everybody out. The inspector, I do believe, recommended sealing in the long wall, but they did let workers back in. So CO2 levels, clearly the fire's at least manageable at the moment, or they wouldn't let people in there. If they really are turning the continuous miners, then there's a chance they're developing a new panel, and they can save the long wall. If they do that, then maybe Anglo's position is correct that it's not a material adverse change, and maybe Peabody's stuck with it. Now, from Peabody's perspective, if the mines are good to go and they're not going to get stuck with the responsibility of having to rehabilitate them, well, they want them. So they'll have to probably do a sell down of Centurion, maybe a sale of other non-core assets or things like that. But they want the operations. So all of this is really, I mean, balls in Anglo's court. If Anglo can successfully restart the mine, then BTU is going to have to, is obligated to purchase it. And if that's the case, then I don't know if 1755 is the right price for that. It got just absolutely. I mean, we were in New Orleans when that news came through last year, and I think the stock price was close to 30, and it just went all the way down to 10. Just got absolutely murdered.
Yeah, yeah, it was up here. Yeah, just south of $30. It just got smoked. Yeah,
Mhm.
got all the way
Yeah,
down to nine or
yeah, and
960.
you can see right where they did the deal. Like it's plain as day.
Yeah,
So
yeah,
it is, when it got down to $10, that's probably stupid, um, to be fair. But it got punished, right?
yeah,
They had talked about shareholder returns. They talked about doing buybacks. They had a small one in place, and then they went and made this big acquisition that'll put them back in debt. So shareholders just revolted.
yeah,
Um, so I think you see where the bottom is, and I think anywhere down there, the difficulty to kind of project with them is how long is it going to take them to pay off the debt if they do have to push this deal through? What all are they going to sell, and what does their cash position look like after all the smoke clears? And that's pretty foggy, pretty difficult to figure out because there's a lot of variables in there. So again, up at 1750, I'm a little cautious here, I'd probably say.
yeah,
But down in the low tens, yeah, you can buy it. It also has the most liquid options chain of
yeah,
any stock, of any coal stock. So
yeah,
it has weeklies that are available. So like, BTU is a company that you can play just general directionality with on coal markets. And it's a big it's one of the few that is liquid enough just in general to put a big slug of capital to work. So there's a lot that's positive about the company. I think but the overall value is contingent upon how this deal works out, and then if it goes through, how well they can digest it, how quickly they can sell down portions of assets to assist with the transaction, and then how well they can operate the mines. I mean, two of which have had fires.
yeah.
Now, granted, Peabody has their own. has their own history with that. Centurion itself is a restart of North Uniel, which had a mine fire, back in the late 2010s. So they've got some experience with it, and yeah, I don't know. I mean, I'm kind of just in wait and see mode with it. Um, if From an operational perspective, I expect this quarter it's probably going to be pretty good for them.
Okay.
I'm in the process of updating the model. I'll probably put out a piece over the weekend on it. But yeah, like short answer is I think uh, preliminary results look okay at the moment. So, but I'll have more definitive opinions on that here probably tomorrow.
Okay. So in a nutshell, if BTU doesn't get the Anglo assets, then overnight it's probably going to do that, right? If it does
I
get them, then it'll probably do that.
I think that's probably a fair assessment.
Okay. All right.
A return to the mid 20s if they do, but I mean it's not going to be overnight. Like if they litigate this,
Yeah.
if there really is a material adverse change, that's going to be 2-3 years in court.
Okay. Okay. All
So
right.
we'll see. In the meantime, the mines that they do have, they've been operating pretty well. So
Okay. All right. Okay. BTU and um, let's see, Australian coal miners. How about Nav and Mitch are asking short to medium terms prospects on Whitehaven?
I mean, I don't have any trouble with any of the Australian stocks really. I think Yancoal's still my favorite.
Okay.
Yancoal's really focused on shareholder returns, good margins. My partner Joe Aldina just put out a piece on it when it yeah, if you want to pull up that chart. See that big
Yancoal.
red candle the other day?
Yeah, that one.
Yeah, like that was I don't know what that was, but that was a buying opportunity. That was a buying opportunity, what
That's
that
what we
was.
call a moneymaker line right there.
Yeah, right. My partner Joe put out a piece when that happened and talked about he was picking up shares then. For me, this is a hold. This is another one you can kind of accumulate, I think, over time.
Okay.
The dividend, I don't know what the yield is on it right now, but
Let me look it up here real quick.
yeah, 7.9%.
Almost eight. Huh.
Yeah, it's pretty great.
Yeah.
This
It
is
was like 14 or something at one point, wasn't it? But
yeah,
they had to
it's
cut it a little bit.
no, the price went up, I think.
Oh, okay. Oh, that's what happened. Yeah. Share
Yeah,
price went up.
it was like accidental high yielder for a little bit.
Yeah.
But yeah, the dividend safe. They'll do specials. They might buy back. I mean, they might make an acquisition.
Oh,
We'll see sort of what they do. But this is one of the few companies where I think if they make an acquisition, it'll probably be pretty smart and probably won't matter too much to the bottom line. So it's just buy it, hold it, love it. Not much else to say. Whitehaven's kind of in the same boat, but because they're now kind of 50 met. And look at that.
yeah.
Look at those green candles in that
Wow.
gap. Yeah, it just got, I mean, people's faces got ripped off. They were shorted.
Yeah, yeah. I was gonna say, I hope you're not short there. That that's an unpleasant
Yeah, yeah.
morning.
So again, same thing with the Australian stocks. We're making highs that are sort of congruent with where we saw, I mean, I guess last, September, October when Whitehaven made its last move. I think it's just a higher high or a retest of those levels, and I think we'll see a higher low in all these. So they're trending in the right direction. I think coal markets will still take about a year to really gain momentum.
Yeah.
But we also have to kind of realize that the professionals will front run that, and so as soon as the 1 month momentum kind of kicks in, it's not they're not a bad place to be.
Okay. Yeah, I see. It looks like there might be a bunch of incoming golden crosses here where the 50 moves above the 200. So that's kind of indicative on a general trend up.
Mhm.
Okay, Whitehaven, Yanhole, Stanmore. What do you think of Stanmore?
Same. So I mean, at lower met coal prices, Stanmore actually really does well. They have comparatively low costs. They Yeah, I mean looks exactly the same, right?
Yeah, yeah.
So they need to move up a little bit higher to retest their highs from last year. So maybe they have a little bit more to run. but again, the met market I think is just kind of here. It's good to see it moving up here in the summertime. Stanmore should benefit from that to some degree, but good cost structure, well managed company. No real complaints.
Okay. Let's see. Let's move on to Colonial Coal.
Oh yeah,
What's the ticker on that one? Is that no, that's Ramaco.
yeah. Colonial is
CAD?
EAD. Yeah.
Yeah. Okay, there
Mhm.
we go.
No idea. Uh, that's this is a project that doesn't have a mine plan. It's contingent upon who acquires it. Um, and yeah, so I don't know. What was the question in there? Somebody asked if the city.
Insights about the sale of Colonial Coal. What is his
Yeah.
perspective on the sale of Colonial Coal assets and the multiple they can achieve? Double A and Nicola is asking about this.
I mean, I've said before on here, I think the assets themselves are good. I think the coal's great.
Yeah.
And if I'm being honest, by the time we get to the back half of this decade, we're going to need more of that type of coal in the market, period, stop. But mines take 5 to 7 years to develop, and so far we haven't even broken ground yet. So it's contingent upon a sale, which makes it very hard to predict. But it is going to move around with the beta of met coal prices anyway. So it's not a bad vehicle for that. It really had a huge green spike there in July, didn't it?
Yeah.
With a
What was that
big
day? That
amount of
was
volume, yeah.
eight point
Yeah.
eight point 8.8%. Yeah.
Yeah, so somebody thought $1.40 was too low for that. And I'm probably inclined to agree. I think the long-term price of met coal is in the somewhere between the 225 to 250 range minimum. So, for their resources, that should imply I don't know, 250 a share or something like that. But again, Colonial's so speculative, it's hard to make predictions about it, but great quality assets. Hope somebody comes on and does something with them here pretty soon.
Okay. All right. Okay. So they're in the very early stages, basically just waiting for AMR
Yeah.
to come by and give them a check.
Yeah, I don't think AMR is going up there, bud.
No, okay. Who are prospective buyers if you had to guess?
Glencore,
Okay.
Glencore might be interested. I mean, they have assets that would sort of make sense with. Uh, Gina Reinhardt had announced she's going to open up a Canadian project
Hmm.
from and that was some interesting news that happened about I don't know a couple of months ago. So if she's poking around up there, maybe she could be an acquirer of it as well. Hard to say.
Okay. All righty. Forge Resources. I don't even think I've heard of them. What?
Oh, that's yeah. So I advise Forge Resources, public disclosure. I'm a strategic advisor of theirs.
Okay.
They have a coal project in Colombia.
What's their ticker?
FRG on the Canadian exchange, or FRGGF. Yeah, there you are on the CSE.
Oh, I do have it on the screen. I guess I have heard of them. Okay, where is it? FRG. There we go.
Mhm. Yeah, it during the bad part of the market, they were actually the best performing stock year on year heading into it. Now they haven't had the uptick today is because they just announced they hit they're punching the decline right now down into their coal. This is going to be a small mine at first, 250 300,000 tons a year, something like that. It's not going to be a big one. But they have optionality with the land packages around them, and they have designs on doing more. But right now, we're like they just hit development coal today, actually, and
Oh,
put out a press release. So what they'll do with that is they'll send it out to get it tested and sampled. They'll send it to their offtake partner. They're going to get paid a little bit for that, so that you should see a little bit of cash flow from them. But by the time we get to the end of this year, but yeah, they're just getting to the coal scene now. So more to come on those guys. I've really enjoyed watching them develop this project. It's not very often part of the reason that they were interesting to me and why I signed on as a strategic advisor, because there first of all, there aren't a lot of people that are doing development in Colombia,
Yeah.
which has kind of underrated met coal quality and has fantastic thermal coal quality. This is going to be, at the end of the day, probably a mix of both, but I think initially they'll sell to one of the larger producers in country will use it as a blending coal to kind of improve the quality of their material. Um, but like nobody's really financing small projects. Like I've had 200 300,000 ton a year operations in West Virginia that we've tried to go around and find capital for, and it's just impossible. So
Hmm.
these guys they also have a precious metals project in Canada. So they're kind of have their feet in two different buckets to some degree. But that's how they've been able to access capital markets, which is a sneaky backdoor into the coal industry. But they're going to do it. I mean, they've got their development team down there in Colombia is really good. It'll be small to start, but I think probably over the next 5 years or so, they'll do some interesting things.
Okay. Okay. So yeah, small market cap, but interesting. Okay.
Yeah, it's like it doesn't trade by appointment, but it's don't hit the market bid, man. Put in
Yeah,
put it
no, no,
in.
no, don't do that. I'm seeing days here where it's only 20,000 shares taking
Yeah,
place and
it's
the
like
thing's selling for
yeah,
60 cents. So
like
anyone
limit.
watching this show can literally move the price of the stock.
It's like yeah, if you want to go after this one again, like it's this one's small and
Yeah.
it's designed to be small at this point in time, but like limit orders only.
Yes. Um, okay, let's go into that answered Igal's question. Junior coal exploration. So Random and Leasy both want to know why are there no junior coal exploration and development companies? Well, we just went over a couple of here.
Uh, yeah, I mean, there are people they're doing projects. The reason is we know where all the coal is.
Okay.
That's the short answer. Whenever you decide to do like we know, in the U.S. where all the deposits are. We know in Indonesia where all the deposits are. The reason that you do any drilling now is like, well, you just want to make sure that you're planning your project correctly. So nobody's out there exploring for coal. It's a mature market. We have enough of it, for the time being. And if we need more, we know where to go get it. It's just a question of, will the powers that be allow that to happen, in your particular jurisdiction, which, your mileage may vary.
Yeah. That's a great way of putting it.
Yeah.
Do our big thinkers and politicians want it to be so? Okay, let's see. Canadian Natural Resources. We kind of went over that. Um, let's hit thoughts on emerging market coal companies at the top level. Coal India, coal China coal, Indonesian coal companies. How are they run? Who do they
Uh,
benefit?
yeah, I think the ones that you want to look at are Mongolia, which is South Gobi, and Mongolian Mining Company. Um, they're numerical tickers, and I always forget them. So
Okay.
let me look them up.
South Gobi and what'd you call it? What was the other one?
South Gobi is actually traded on the venture exchange, I think,
Okay.
but it's incredibly illiquid there. So you're better off going to get it uh, on its native stock. Um, yeah, I mean they do have an OTC ticker MOGLF, but the volume is like nothing. Mongolian mining is 0975.HK.
Wow.
Yeah, exactly. I always forget these. And then South Gobi Resources stock is 1878 .HK.
Okay.
You can also pick it up on the venture exchange. Its ticker there is SGQ.
Okay. Okay.
Again, pretty illiquid. If you're going to get them, I'd get them on the Hong Kong exchange. if you can. Mongolian coal is interesting in that South Gobi's costs are like nothing, basically.
Okay.
And they basically have a captive market in China. They can produce as much as they want. China's going to take it. From a coal quality perspective, neither one. Well, I shouldn't say that. Mongolian Mining Company has one mine, Uka Kudag, that is an excellent quality low vol coal. But the rest of this is like kind of semi-soft, fetches a low price. But because the costs are so low, that it'll work a little bit. But again, when it got down to what was that, 9 cents? Jeez Louise, back in
Yeah,
24.
somebody got real lucky here at 1 cent, but yeah, they got down to 6, 7, something like that.
Yeah, like the where it got down to right before the beginning of 24 was just kind of silly.
Right down
And
here.
so yeah, so they've kind of, both the Mongolian companies have kind of started to bottom off and start to tick back up. So I think heading into restocking season, they're both probably pretty interesting.
Okay.
Um, mostly just a coal price beta play. Again, coal on the Dalian Commodity Exchange has really, I mean, it's almost gone vertical. And a lot of that I think is speculative. I'm not sure I'm a necessary believer in it with steel, China steel margins still negative. But when the number goes up, you just, it is what it is.
Yeah. Okay. Okay. What about got some questions here on Glencore? Maybe just any commentary. Orpheus, a couple other people I can't remember. Sorry. I'm trying to get through as many of these as I can here.
Yeah.
What macro thoughts on Glencore?
Well, I mean, we just put it. I mean, I still think of Glencore mostly as a copper company
Okay.
until they finish the earnout with Elk Valley Resources. But yeah, down at 6, that was pretty. Is
That
that
was a
lib-
gift, was it not?
Yeah, I mean that's what was that Liberation Day?
That was Liberation Day, yeah. I, I,
Yeah.
I I don't even think I ate or went to the bathroom for those like 2 days. I was just in front of the screen trying to buy as much stuff as I could and like, am I
Yeah.
am I crazy? Is it like what am I missing?
Same. I mean, I made pretty much most of the money I made this year has been being short into that and then just buying up as many commodities as I could on the bottom.
Yeah,
And of course now mostly not participating in these continued rallies. But I can't. I think we said this at the beginning of the year when we chatted. Like I can't predict how policy is going to perform.
yeah,
So Liberation Day was one known. We knew that was coming.
yeah.
This August 9th deadline apparently now is looming. That might get pushed back between now and then. Who knows? But I just try to not really think about it that much. For Glencore, I think Glencore probably should be up in the $10 to $11 range there. Rather than down at 6. But yeah, as long as copper prices are going to go up, Glencore is going to benefit. Certainly on the met coal side, uh, they've been selling met coal, I think, at lower levels than I would really be happy with. But again, they bought Teck, so the cost structure there is great, and they're Glencore, they can do whatever they want. So maybe the coal realizations won't be fantastic, but they'll certainly maintain market share and they're going to make a mint on copper.
Okay. We got a kind of macro question on energy here. Colin is asking overall supply demand of electricity. Now, the old coal power plants, at least in the U.S., they're not restarting any of those, right? And they're not going to.
We'll see.
Oh, really?
We'll see.
Okay.
I I mean, I think we're going to have to. There's already been some talk about it. I don't know which ones. That's actually probably one of the things that my partner Joe Aldean and I are doing a podcast later this afternoon that'll be up on the Coal Trader and on the Clear Commodity Network. That's one of the things we're going to kind of talk about beforehand. So, which ones might be targeted. I don't know. And then, I I spoke with Senator Manchin a while ago. He's on the board of Ramaco Resources, which we haven't had any questions about yet. So this is a pretty good excuse for me to talk about that. But they've been
Okay.
opening the Brook mine out in Wyoming, and they just finished a rare earth study on it. But um, I was sort of mentioning to him that Ramaco, I think there's going to be federal money available for them, and he
Oh,
agreed
wow.
with that. But when they announced the completion of the rare earth project, yeah, it went to the moon.
Yeah, it just went ballistic.
Yeah, or the completion of the rare earth study that Fluor did. So it's sort of being re-rated to sort of look like more like MP materials, which also went bananas.
MP
Um,
material. Oh, yeah, yeah, yeah. That was the other rare earth one, right?
yeah, well,
Yeah.
I mean, it's the only rare earth mine we got in the U.S. really, other than I think Round Top, maybe down in Texas. But yeah, that's what happened with Ramaco here. So when I was talking to the senator, we were talking about we're definitely going to have to restart coal plants at some point in time. There are a few that might be candidates. I can't remember which ones they were offhand. And I sort of said, we might have to build a new one.
Hmm.
Um, might even have to build one or two new ones. I'd love to see, a smaller plant go in out there in Wyoming that would support, the coal piece of Brook, as it opens up out there. But that has yet to be determined. But I do think we'll see a couple of restarts at the very least. Um,
Okay. That
if
that was pretty much impossible when you and I were first talking, but
Yeah, oh, 100%. Like not even on my bingo card at all. But if power demand growth is going to, go at 2 to 3% per year, it's we're going to have to do it. We're not going to have a choice.
yeah.
And maybe the thing that actually you know, it over the edge into even where, moderate Democrats would probably support it would be, if we had some kind of grid event, some sort of instability, which I think, could be possible next year.
Okay.
So keep your eye on that. I think utilities are still, regardless of economic, macroeconomic conditions, I think utilities are going to do comparatively well, as well over the next year or so.
Okay. Okay. What's the difference in the tickers here for Ramaco between the ME?
METCB is the royalty company. So
Ah,
that's the company that receives the royalty that the mine pays. So they had just split those out. It's a little confusing share structure. Without getting too far into it, the main one you want to pay attention to is METC because that's going to reflect first off met coal markets, but also now to a lesser extent rare earths. Now it's going to be an expensive rare earth project to build, and again, I hope they don't spend any of their met coal money on that. I would go after government assistance and other capital raises. Honestly, it's probably worth a spinoff at this point in time, and just let it free float by itself and leave the met coal business alone. But that's not for me to decide, sir.
yeah. Yeah. Don't spend your own money on it if Uncle Sam's going to give you some taxpayer money
Oh,
to do it for you.
absolutely.
Yeah.
Absolutely.
As a taxpayer, I'm appalled. But if I own this
Uh,
company, I would love it.
well, that's a fair point. I mean, the prices that they used in the deck. If I had one criticism for them, the prices that they used in the deck to make the initial valuation in that Fluor report were, I think they were unrealistic. I think they were crisis level prices. But if we really do have a, crisis level, need for materials, I guess you can probably justify it that way. But I thought they were too high personally, to justify that sort of evaluation.
Yeah. Yeah. Okay, we got through Glencore. Several questions on just like if you had to pick one, what would
Hmm.
it be? For a general retail investor, if you got to pick one stock, what would it be? Or maybe
Right
even the
now,
ETF.
right now it's pretty easy for me. It's core natural resources. The
Okay.
thermal coal business has floor and ceiling contracts heading into API 2, so they'll never lose money. They're going to buy back stock.
Oops, that's
And then
not it.
again, the arch piece of core natural resources is like a call option on met coal.
Okay.
So that's the horse that I'm riding that I feel incredibly safe on. The if we get a pullback into the 40s, I think HCC is kind of a no-brainer.
Okay.
And then certainly, if you wanted to do a basket, if AMR comes back into the 110s, HCC comes back into the 40s, Ramaco comes back into the mid-teens, you can probably just create a basket of those a 2% a piece or something like that and just kind of forget about it for a little while.
Okay. Okay. The coal ETF you guys or you had a hand in putting together, that one's had a nice little run, just kind of catching some of the beta of this sector. And it
Yeah,
looks like the market cap of it is, or assets under management is getting a little bit higher too.
yeah, it's I think as we talked when the first time it came out,
Hmm.
these are the same guys that, and while we're at it, I might as well put on my coal hat.
There we go.
This is from the guys at Range Resources. Shout out to Tim Rotolo over there. But they developed one of the uranium ETFs that's relatively popular, and that one also took a little while to increase their market cap, increase their share. What I've been really happy with is like it's the way it was designed was to be kind of a 50-50 split between met and thermal,
Yeah.
and it's really done exactly what it's supposed to do, capture the beta of coal price moves. So it seems to be functioning as intended. They also they made one NUKZ is theirs as well, which is the nuclear side.
Nukes. Yeah.
Yeah, and it's done exceptionally well as well.
Oops.
Um,
Nukes. Oh, that's stocks. There we go.
yeah,
There. Yeah.
look at that
Yeah.
one.
And this one's pretty new. They came out with all four of them at the same time, right?
Yeah, there's an LNG and there's an offshore oil and gas.
Oh, there's an LNG one.
Yeah, and I forget what I should know what the ticker is on that, and I don't remember.
Okay. Yeah, I should. I have them pulled up. Anyways. Okay. Cool. Cool.
But yeah, those guys have done a great job. The coal ETF's done pretty well. Again, it's kind of 50-50 met and thermal. If you're institutional and you have it's hard to get through compliance. You can actually, and you want to hold coal at all, the coal ETF is the easiest way to do that.
Yeah.
But yeah, it's volumes picked up pretty nicely. Anyway, just uh, love talking to those guys whenever we get a chance, and like to see continued success of it going forward. I mean, we're almost back up to where we started too.
Yeah. Yeah. This was one of the ones I missed on Liberation Day. It was like, but before I made a buy on any of these, I'm like, am I high? Like, why is I was on the phone with my buddies, like multiple phone calls. Like, what are we missing? Like, why is
Yeah, it
like, there's
and
no way he could put this amount of tariffs on the countries. You know what I mean? Like,
no, no, and in fact, metallurgical coal got critical materials status, even though we export a whole bunch of it because it's so integral to the steel industry. We got classified there. Going to get a little bit of a tax break. We'll probably hear on earnings calls, what the effects of that. I think it's like 2.5%. Are going to help with the companies going forward. Um, they wanted there was a period where the administration wanted to put tariffs on Chinese vessels, and all the coal companies and the National Mining Association wrote letters saying please don't do that because I think 49% of the global dry bulk fleet is Chinese owned or Chinese financed, so you just can't avoid it. And that's before we get into grain, right? Grain also uses dry bulk ships.
yeah,
So it would have destroyed the coal industry. And to the administration's credit, they listened and they put that on hold for a while, and they'll try to come at it from a different angle. So so far, I think from a regulatory perspective, the executives are pretty happy with how things have gone. Would we like to see, more action? Yeah, I think we probably would because, again, we're going to need to probably reopen plants. We're probably going to need to I need to produce a little bit more thermal coal domestically. Um, and but I think I think that'll happen over time, and in the meantime, we're just going to benefit, I think, from a price perspective.
Okay. Thermal coal in the U.S., who's the biggest producer and who most likely might benefit from that?
ARLP is my other horse that I'm riding.
Okay.
It's also a master limited partnership. But for some reason, my 401k lets me own it, but not NRP. I don't understand why. The fidelity is weird, I guess, is the answer to that. But yeah, Alliance, again, they've diversified a little bit away from coal. They have gas royalties and some other investments that have helped them kind of maintain their banking relationships over time. Joe Kraft is one of the savviest executives in the country. Great guy. Always wonderful to speak with. And they're very well managed. They just hired Jesse Parrish from Blackhawk Mining, and which I thought was a great hire. So now they have, if Joe ever hangs up at Spurs, I mean Jesse can step right in, and he's also like top quality person, top quality management. So Alliance is going to be around for a long time. They didn't make any acquisitions here over the past like year or so. They are laser focused on, we're going to mine coal, we're going to make a good margin, we're going to return the value to shareholders. Period. Stop. Um,
They got a good
so
dividend too, right?
yeah,
Yeah, yeah, yeah.
it's 10%. It's pretty safe, and I haven't. While I think about it, I'll pull up. I gotta look at EIA coal prices. Um, so I don't have a line chart of these, but yeah. So Illinois Basin coal right now
Oh,
is
sorry. You want
trade.
to share your screen?
I can, sure, yeah.
Okay.
If you ever want to look at domestic coal prices, just go to eia.gov/coal/markets.
Okay.
And so Central Appalachia, this would be, thermal coal that, byproduct that Arch and AMR sell and stuff like that. There's still some thermal coal producers down there. That's the highest price. This is Northern Appalachian coal. This is what the Core Natural Resources sells from its Pennsylvania mining complex. Here's the price that ARLP receives. This is also the price that Peabody will receive from its Illinois Basin operations. And then the Powder River Basin is up at 14.30. I think costs are still down around $13 out there. So, um, you know, Arch has a big PRB mine, Black Thunder. Peabody has North Antelope Rochelle, and a couple other operations out there. But they should all be making, money at a pretty good clip. And I think these numbers probably rise over the next year.
Okay. Okay. Awesome. Um, anything, I know you got a heart out here. Anything I should have asked that I didn't? Any closing thoughts?
Well, no, not really. I think we kind of covered just about as much as we possibly can. I mean, the bottom line is we're still, in the trough part of the cycle, but we're just now beginning to come out of it. I think for met coal, we have to keep in mind that next year there's more supply coming on. So even though prices are improving right now, I think the off season we might see a retest of lows. So, that's when I think probably the next buying opportunity will be sometime like October, November, somewhere around in there. It's if you're in coal stocks right now, I mean, be sure not to round trip it. Make sure at some point in time, especially when we get into, past August into September, protect downside, take profits and all that sort of stuff. And then, the shopping list is pretty small.
Yeah.
I think by now, like, your listeners should have a pretty good lay of the land and know who the players are. And then, of course, I'll be writing about it at thecoaltrader.com, at the Coal Trader Substack, and on Twitter at MFOrder, as much as I can. We're getting closer to the next party time, but we're not quite there yet.
Okay. Okay.
So it's for now. It's I think everybody's about, good old fashioned blocking and tackling, just keeping costs down, generating as much margin as they possibly can, and kind of just grinding through this part of the market cycle.
Okay. All right. We'll put all your links down below. Matt, this is always a pleasure. Thank you for coming on the show.
Thanks, Steve. Happy to do it anytime.
Yes. And thank you for tuning in. Go to stevebartonmoney.com for more and have a wonderful day.